Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. Should be here tomorrow afternoon. How is everyone going? How is everyone doing going? I don't think we're going anywhere yet. Grand Rising, Christoph. Good morning, Patrick. Hello, Eric. Hello, people hiding in the background. How is everyone doing this fine Monday morning? Let's get right to it. So, more intervention last night. We'll take a look at that. We had a lot of the S&P PMIs. We're still waiting for the U.S., but we had a lot of contraction overseas. Chicago Fed National Activity Index printing zero point 0.1, and the prior was revised up, so barely staying positive, and that's about it. You got 15 minutes after the open, the composite. I'm just watching contraction versus expansion. Market pretty mixed this morning. Some megas slightly up, except Tesla's down. Taiwan Semiconductor pretty big. A lot of stuff getting trashed in China. Yuan was getting hammered earlier. Baba down big time. New lows on Baba. FOMC, remember, it's the quiet period of the Fed. This is easing back, which is surprising me because that 75 is baked in. Remember, next Wednesday, not this Wednesday, next Wednesday, the 2nd, we should still be in negative gamma, but we need to wait for, because we had OPEX on Friday, we need to wait to see how everything is revised in neutral mode. On the fear and greed index. Pretty quiet morning for earnings, so nothing major after the close. I'm looking at Logitech and Discover. That's about it. So, let's see. Good morning, Andrea. Good. Everything is great again. Morning. Options 22. Tesla, they did lower their prices in China. Looks like the 10Q drop. Did not get a chance to glance at it yet. Yes, thank you. In China. Yep, they are cutting prices in China. So China, surprising after Z gets, essentially the third term, and GDP numbers now released come out stronger. What am I watching going into the open? We'll take a look at a bunch of stuff. It's fair way away, but this is what I am watching for. This 37.36. Should we have weakness today? That is my major line in the sand. Minor line in the sand is 37.80. And then we go into the clear path move. And right in front of this 37.36, this is a potential double top, which would take us back down to potentially Friday's low area. And then that could roll into another one. So those are the two bearish, but I need at least a 1 hour close below 37.3650. One other thing, there is right in front of that, there is this breakout zone. So 37.36 is very key because you'd also have to get to that through this breakout zone. And remember, just a trade through does not trigger. If you're trying to do it aggressively, it'd have to be, from my perspective, a trade through, a little bounce and a roll over play. And then if it does not close on a 1 hour basis before that, the trade is not triggered. So to the upside, we had that 38.11 harmonic. Still, that's going to be the retest area. And then if it does get the rally on, 38.38 to 38.45 is the next major key area that I am watching for. The NASDAQ, no potential double. This, again, is not high enough. So let me just do this for a second. There's your major support, 11.320, 11.318. Below this key point, though, is still pretty significant on a closing basis below this 11.260.75. Why? Into a clear path move so you can use clear path targets. The clear path target for that, we have the double in the S&P. We don't in here, but the first clear path target would be 11.156. This is a decent clear path move, and this breakout zone is out of the way. So do keep that in mind. You can fine tune it with 15-minute charts, and you see there's a little bump. The other major key area is right here, right in front of that, about 11,200. So that's an area definitely to move down a stop from my perspective. To the upside is just a return to this 11,541 area. Remember, there's lots of volume going off from back at the 6th up here. And then the major target, the minor ones, I would focus on the harmonics. And from this pausing area still, which just reinforces this 11,545, 11,550 area, then 11,668 would be my key target within this sort of distribution pattern, and then 11,763 to the upside. Let's see who else is here. Hey, good morning, Christoph. Good morning, Rams of Fall. What's the S&P showing on Elliott wave? I already covered that yesterday. It's still, there's no minor great patterns just yet. We still have the 5-wave pattern that was triggered. The 5-wave pattern that was triggered on this close right here on Monday the 17th. So even on pullbacks, nothing's changed. The only thing that would change is if you get a close back below about 35.85. Other than that, not much. Dow still marching up. The first target is officially hit for stop reduction. Second target 31,607, then 31,371. The Dow holding up. Again, the best. Now there is the potential reversal signal here. Minor area I'm going in the open with is 31,225. The only way to trigger this is with a 1-hour close below 30,922. And then the target's 30,660, 30,528, 30,400 essentially. So that's where that sits. And again, the target's the upside. This 31. Just use 31.6 for your Dow target. When it's 31,607, remember, I adjust them to take into account the round numbers. And this one, 31,971, is fine. Russell, there have been no great patterns, at least on the bigger term yet, that have triggered. On the shorter term, we have the potential double on the close below 1731.90. 1714 and 1705 are your two key targets on that. DAX, remember, triggered the double last Tuesday. Little pullback to the rotation zone. Rotation back up 13,076. Target going into the European close today. I will be watching that. We do not have this gap fill was prior. Then my next target is 13,254, which is substantial because this one cuts into the wicks. If you want to fine tune things also from the key pausing area before we hit there. So now we have to go to this pausing area. And so 1376 to 13106 is your target zone. And the second target from the double is reaffirmed by the short-term harmonics. So you have a cluster here, so that is definitely a major area confirmed by short-term harmonics. Good morning, Lauren. Good morning, Sterling. All right, the whole crew is in the house. We're getting that little rollover so far. Remember, this was the major breakdown zone, declining rotation zone. Coming up here, first rotation back down. The key area I am watching for, especially, let's just see, did this trade up high enough yet? I forgot to check. Yes, it did. We do have a technical double. I want to see where the conservative lie out because of the 62.5. but nothing great there. So this one lines up, and it is in the direction of the trend. Just double check both targets just to make sure you don't have a major cluster, but this is the cluster area. 12.5% key harmonic, 62.5% retracement harmonic, and the first target for the double. Has to trigger on a close below 108.25 and a half. That's the very key area. Why? Because if you get that in the close below 62.5, it would favor the retest of the lows on Friday, and you'd have the double probabilities. No, they're not additive. 109.09 and a half, 109.04. All the targets are valid, but this is the key area I will be focusing on between the 50 and the 62.5 of this run-up. So we have a little pattern there. I love patterns going into the open. At least it makes it easier. By the way, this double with the Japanese intervention last night pushed it. The double is off there. But above about 112.30 into a clear path. So we get to use clear path targets. Now the breakdown zone, and you have, if you look here on the 15-minute, remember you can fine tune stuff. The 15-minute, it gives you a stop reduction there. And then the 1 hour, that's where you get one key time frame lower. So the first two targets, at least on the breakout above here, first target for stop reduction from my book would be 112.56. Then the next target would be 112.73 on the rotation back up. So we got it pushed down where I was watching for this breakdown play, but this was a government, again, Bank of Japan intervention, which pushed it lower, and the dollar still snapping back. Dollar still snapping back. Let's just take a look at that Japanese intervention right here. Here we go. The little quick push down, by the way. See here, coming up to the first target on that double. Then here's the intervention. Let me take this off at this point. Intervention. And look where we're already sitting back to. Key area now. Everybody knows how strong the 62.5 is. 149.54. Look at these snapbacks. These interventions are becoming shorter and shorter lived. This is going to be a pain point, major pain point with the yen. So that's the key area. If you're trying to trade this, you got to be really nimble and move up stops aggressively because the interventions are coming quicker and sooner, but this could really at some point snap. Snap-ola. Now, what are our next key target areas? Well, here's where really nice area to do. I mean, this couldn't even get back to the prior breakout zone. Really great area to do the reverse and the forward harmonics right here. So we do get that key close above the 62.5, a return to the high area, break up from the high, a stop loss 152.75 area, then major cluster 153.39 to 153.50. Even if you don't trade this, this is a really good learning exercise on how you get clusters. The euro, see, don't like this crap. I got to get this triangle crap off of here. I'll only get interested from a stronger euro from getting above this 99 area, and then that would be a retest of the highs. Not much going on since we're caught in this consolidation right now. So that's a pass for me. Pound in consolidation, only again interested, but above the 50 would be a minor breakout, but slamming into the prior highs from Wednesday the 5th. So the play is above 115 essentially. Other than that, breakdown play below 110.70. Let's see. Where do we sit? Are you talking about the yen intervention? Well, that's what happens when you dump. I mean, that's you can't do a light intervention, but these interventions aren't lasting long. And there's a number of traders that have not been around for major currency interventions, so you're starting to see it, and isn't it fun with the dollar wrecking ball? So that's the key stuff. Crude, by the way, nothing yet. From my book, it's sitting on the hands in crude. Yeah, I don't even know if that's valid for a little mini. I mean, that's a micro pattern right there. I'm talking from the bigger we're still in. Yeah, that's tradable off right now. Nothing I'm super interested in while we're caught in this range. Waiting for some better pattern to unfold. That did come down to just enough. I looked at that earlier. It was there, but was not there. So now, let me see here. We'll be keeping an eye on that double. So that's on at least a sloppy, but trade a 4-hour close above 87.14. All right. Spiders and Qs. Spiders and Qs. So pre 376.17. Let me raise the levels here. 376, remember the key support now coming in about 375.50. So on any pullback, that's my key support level going into the open before the gap fill. Then the gap fill would be 374.30. Remember, you can always use your gap harmonics, but my key major support, because this is of the highs back from the 18th, that's going to be major support. Using these harmonics, 378.87, pretty key area right there because we have these two highs in that vicinity. And then look, the harmonics line up. So on the continued play to the upside, your target's roughly 382, which is the prior significant breakdown zone now confirmed by a harmonic. So those are your key upside targets. So there you go for those spider players. And not the QQ, the QQQ. For those Qs, the Qs, remember, we should be targeting pretty much above this 50. So 275.86 key support coming in. Oh, it's still resistance. So we have key resistance. 276.70 would be my first target support. We're still below Friday's hot. Let me look here. Friday's high, 275.97. We're just below that. So if we make a run up, I would not ignore 276.70, which is your key. It's a harmonic and a key gap open price at 276.53. Remember, you still have a gap behind. So unless we get major selling pressure over the next couple days with earnings coming out, I'm still focused on this gap and the harmonic right in front of it, 280.44. And the technical gap fill is to 279.76. So 279.76 to 280.44. Let's just see. So we don't have a stellar play in here from any gap perspective, but your significant support is about 274.40. You break below that, you're going into a major support zone. Yes, this is a clear path, but there's a ton of stopping points. Okay? I mean, on a pullback open, I could not get bearish from a Q perspective until about below 273.85. This is a nice pullback zone going into some key support. Tesla, gap down. So it'll be the gap harmonics off the open. But there is major support still. Major support at this lower 200s. So until we start getting momentum, really starting below about 205, not interested from the bearish side. Would be watching for a gap fill play below 205, minor 202, but then 198.50. But my major target now cluster 195 area. And this will probably take this double will be off with this gap open. There is no potential double. So it's to the upside is the gap fill play from Friday's close to this open. And then you remember you still have a gap fill play back to the gap on Wednesday to Thursday. So those are the only targets to the upside. So let's see. Are we waiting on a miracle? I need a miracle every day at this point. I need a miracle. Christo chiming in on Nike. All right. So thank you for sharing thoughts. Remember, I'm going to be focusing going forward on anything with a question mark. Anything with a question mark. Other than that, people have it because we're going to go with members chat coming up soon. So there'll be, for the people who want to join for a small monthly fee, there'll be your own private chat, which you can carry on, give your trade thoughts and everything else in there. Yes, thank you, Sterling. Let's just peek in since you brought it up. And I can't. I typed the name. I don't have any great patterns in that, by the way. All right, I'm going to leave it at here today. If something major, I can pop on at lunch. I'm not expecting it. Other than that, also remember we're in Fed blackout period. So unless there's a miraculous Timoros article, there is no Fed speak. Which I don't know then if you have the Fed Whisperer publishes an article during I can't speak from the Fed, is that considered Fed speak? Also remember earnings. A lot of stuff is going to be positioned for your mega cap earnings coming in. Your mega cap earnings, like tomorrow after the close, Microsoft Alphabet. Wednesday, Meta's lost its shine, but people will still focus on it. And then Thursday, Amazon and Apple. So be aware of positioning for those moves. Exxon, Chevron for Friday from energy perspective. And a lot of buyback programs open up again after Friday. So do keep that in mind if you're just tuning in here as a Path Trading Partners newbie. With that, I will chat with everyone later. Yeah, it'll still be on YouTube for chat. It'll still be, but if you set up a supportive little minor subscription, you guys can have all, you guys and gals can have your own private little chat going on. And you get highlighted. And I look at those comments first besides question marks. Yes, thank God no Fed. Although, watch out for any Timoros articles. With that, everybody have a fantastic trading day. I shall see you all after the close. Bye for now.